Live, we focus on the big picture, a big week ahead. Jim Bianco, President Bianco Research, joining me. We had an incredible month of May, a V-shaped recovery off that 4,800 level or so on the S&P 500. What now?
Oh, I think more of the same. What happened in the month of May was, if you remember April, we were all talking about the soft data. The survey data was showing everybody was afraid. We were worried about a recession, that the hard data would soon follow it lower. It never happened. That the hard data being the actual economy, counting up the widgets and the jobs, the economy did okay. The stock market rebounded. Interest rates trended higher for the month as well. And I think we're going to see more of the same as we move forward, because it's going to take significant news on the tariff front, I think, to move this economy. Not that they had a little tit for tat with the Chinese over the weekend like we've seen this past weekend. It's going to take a lot more than that, and I just don't see that kind of news coming anytime soon.
Yeah, I mean, that may take a very long time. I mean, July 9th is the date for many of the other countries, right?
That's correct. The 90-day pause for everybody else was July 9th. And if you recall, late last week, Trump threatened to put a 50% tariff on the EU because they weren't negotiating in good faith. And then Ursula von der Leyen, the head of the EU, called Trump. And then he said, okay, we'll keep talking and we won't put on that 50% tariff. So those talks are moving as well, too. So I don't think we're going to see anything from the tariff front other than, like I said, this kind of minor stuff. But I think the market's now learned it's not going to really move on this until we see something real.
And do you think that, so you think that with the soft data not so great, but the hard data was still pretty great, do you think that we'll see volatility where we can go back down to maybe not the 4,800 level, but below 5,000 on the S&P? Do you expect that?
No, I don't think we're going to see quite that unless we get some kind of an event or some kind of a news thing. But on the other side, I think that the top end of the market is going to be, the stock market that is going to be capped. Because if you look at interest rates, we're 497 on the 10-year, on 30-year note, just a few basis points under 5%. We're 444. Boy, everybody's gotten comfortable with that level now. All of a sudden, a couple of weeks ago, that was breathe through a paper bag kind of level on interest rates. And now it's just Monday, no big deal. And I think that's right. And I think rates are going to keep moving up. And as they keep moving up, going through 5 on the 10-year, 30-year note, going through 4.5 on the 10-year note, I think it's going to put a lid on the market. Because when you look at the valuations in the stock market, you need to see lower rates to justify these valuations. Higher rates are just going to pressure the stock market. Not enough to fall to 5,000 or 4,800, but maybe enough to really limit the gains that it could have from here.
Could the Fed surprise everybody and come in with a rate cut? I mean, it's so far-fetched, but I mean, so many folks want one so badly.
Everybody wants a rate cut badly, except there's one problem. The market's not cooperating with it. That's why the June meeting has been priced out. It's like a 2% chance that the Fed's going to cut rates on June 18th, like a 20% chance they're going to cut rates in July. I think the rate cutting cycle ended in December. I think the problem that this economy has is a non-problem, and that is that it's going okay and that we have sticky inflation. If anything, I'd be more worried about a rate hike in late 25 or early 26. I know everybody's talking about a rate cut because they're still thinking this is the 2019 economy where we have sub 2% inflation and we can't get inflation to go up no matter what. This is not that economy anymore. And we have an economy with stickier inflation. So at a minimum, I don't think we're going to see a rate cut for many months, if ever. And I think once that reality sets in, it's more likely we'll be talking about a rate hike into 26.
Wow, no cut for months, if ever. That's some big language right there. And, I remember people saying this about a month or two ago before everything went crazy. But there were still folks who thought inflation could be sticky and that might be an issue and that we could maybe use a rate hike at some point. Tell me about the jobs picture, because obviously the Fed's mandates are full employment and price stability. How are we doing on the employment picture? Waiting on a lot of jobs news this week.
Yeah, we're waiting on the May payroll report on Friday. But going into this report, as of right now, there's very little data that suggests that there's been any weakness in the jobs market. Yeah, continuing claims, those people that went on unemployment insurance has been rising, suggesting that it's been hard to find a job. Maybe that data gets revised heavily. We'll have to see if that holds up over the next couple of weeks. The initial claims data that looks at people that are going on unemployment has still been well behaved. A lot of the survey data, we're going to get the employment survey data here in less than an hour from the ISM report. But going into that, very little of that data has suggested that there's been weakness in the jobs market. So without that, the Fed focuses on prices. And what we've seen in prices real quick is things like truflation and some of the other numbers have been moving straight up through the month of May. That's been tariff increases. There's still a 10 to 30% increases in tariffs is showing up in prices. That's going to be higher inflation. So unless you have a disastrous payroll report, watch prices. The Fed ain't doing anything. And if we don't get weakness in the economy and prices stay sticky, that's where the rate hike story comes in later this year and into 2025, because I think the Fed is still more focused on prices than the market is right now.
Where do we make money here? I mean, we see some of the Mag 7 down today. I remember you always talk about small caps throughout the years. Where can we put some money to work?
I think, this is going to be a difficult environment. I've called this the 4, 5, 6 markets. I think over the next several years, just as a big picture, cash returns you 4, bonds return you 5, the stock indexes return you 6. Now, the reason I bring that up is when you say, where we're going to make money, that to me sounds like code word where am I going to get a 25% gain? And the answer is maybe from an individual stock, maybe from a thematic idea. But if you're waiting for a giant multi-trillion-dollar asset class like bonds or the S&P 500 or small caps or something like that to deliver you a 25% gain, I don't think we're in that environment. Now, 4, 5, 6 is not bad environment, even if we have 3% inflation. It's just that people have gotten so used to the stock market just makes you outsized gains all the time that they've come to expect it all the time. And I think we need to kind of dial back those expectations. It's not a bad market. It's just not what we've seen for the last couple of years.
So what stocks, if you want to, the 4, 5, 6, look, if you want to get around 5%, what kind of stocks do you think may be winners?
I think, other than high growth stocks, the problem with high growth stocks, if I said AI, here's the thing. You're either going to make 3 times your money or lose 2/3 of your money. That is going to be the problem with doing some of those high growth ideas. Now, beyond those high growth ideas, I think the inflation plays are still underdone. Energy, basic material, industrials, those types of plays I think are going to be fairly good plays. Now, they're going to maybe return you better than 6, but they're not going to return you big numbers in terms of that. The problem is, other than that, I mean, again, it comes down to an expectation story. Everybody wants to rush into either crypto or AI because they want to make a lot of money really fast. I just want to emphasize, I don't think that's this kind of environment right now.
I thought it was interesting. Jamie Dimon, who won't be retiring for years, I mean, he mentioned that. He also said to load up on guns and ammo rather than Bitcoin. I thought, politics aside, very interesting. He's never been much of a Bitcoin fan.
No, he hasn't. He really hasn't. He also said rare earths. And I couldn't emphasize enough that I think that that's definitely an important thing for the U.S. to do, is produce its own rare earths. But I think he was talking about the imbalance in the economy and the problems that we have with China and with some of our adversaries, and that we need to maintain a military that can keep us safe, peace through strength, as President Trump likes to call it. And I don't have any issues with that. I know that the guns and ammo thing kind of comes off as he's thinking that the world is going to end or something like that, but I didn't perceive his comments to be that, that worrisome.
Right, understood. Small caps, is there a place for small caps? I had a guest on recently who said he thinks that small caps can really take off. Not yet. Your thoughts?
Yeah, I agree. The problem with small caps is a lot of those are companies that make things. They're domestically oriented companies. They make stuff here, they sell stuff here, but the raw material inputs come from overseas. So they're like on the front end of the of getting hit with the tariffs. The big companies have other things. They've got foreign operations and the like that they can kind of get around it. So I do think that the small cap companies are going to have their day in the sun, but I just don't see it until we get clarity on these tariffs. Now, maybe in the next 2 to 3, 4 weeks, we start getting some trade deals announced, and those trade deals are being viewed as a roadmap. We got a second. We already have one with the UK. We get a second, we get a third, we get a fourth, and we start saying, I see the pattern here. We're going to get a lot more of these, and that could unleash the potential of small caps. But until we see that, I think they're going to be restrained by this idea that their input costs are going to be going up. And again, in about an hour, we're going to get the ISM report. Look at the prices paid number. It's been well above 50%, which means that input prices, the cost of their raw materials have been going up. And it's expected that that number is going to stay up near 50 or well above 50%, again, suggesting more pressure on those types of companies.
Jim Bianco, President Bianco Research. Good to see you, Jim, on this Monday. Thank you so much for the setup ahead. Appreciate it.